The way you become a partner is by persuading the people who are already partners that you will actually add something to their lives if they make you a partner, which is that you will generate work on a leveraged basis because you'll run a team of junior lawyers. Then everyone in the partnership will be able to share in that growth. So to become a partner, you really have to become a little bit famous, develop good relationships with people who might give you work, be known as being reliably excellent in the legal work that you do. Definitely take the other partners in your firm along for the journey.
Hello and welcome to the Ways to Wealth podcast. We are doing take 2. We just did 17 minutes of this podcast, and I know most of Jeremy's world now, but
missed all the good stuff.
We'll try again, Jeremy. So why don't you give us the TLDR, and this time the mics will be on, so we will find out what you're about.
Great. Well, thanks very much, Charlie, for having me on here. It's a great opportunity to talk about wealth and growing wealth. So I'm a lawyer. I'm a partner at MinterEllisonRuddWatts, which is a large commercial law firm in New Zealand. We're also associated with Minter Ellison in Australia and around the Asia Pacific, but a separate law firm here. So I co-lead the firm's banking and financial services division, and within that I have a financial services practice that covers everything from retail investment funds at one end, so KiwiSaver, unit trust, managed investment schemes, property funds, debt funds, all sorts of things, through private equity venture capital funds, and then on down to financial regulation and a lot of fintech, and for about the last 7 or 8 years, crypto, digital assets and other things. So really structured around investment and with a sort of a definite kicker around innovation and disruption. So
totally. Yeah, nice. So that's where we got to today. That's a lot of stuff. And I think kind of like trailblazing the way in kind of the more kind of emerging space. And I guess that's really the culture that you guys have at your firm, considering, you know, what you were saying before about how the firm started its financial service business and how it's kind of expanded out. So really innovators at heart. But you weren't obviously always a partner, at a law firm.
It's the most unusual career trajectory.
Yeah, I'm there.
No, and certainly not born into a family of lawyers.
No. So did you always know you wanted to be a lawyer? Like, that was like, when did you really feel like that was an interest of yours? And I guess what characteristics drove that early in your study? And then, I guess kind of some of you were talking about your other study that you did. It's kind of similar in a sense, is it?
Yeah, so I didn't start out wanting to be a lawyer. I came to university, I enrolled in law and arts, so I did a French degree because I had spent some time on exchange in France, done some other things, and law because I enjoyed English and history at high school, debated school productions, all of that good stuff. Went through not necessarily thinking if I was going to be a lawyer that I would be a commercial lawyer, because I didn't know any commercial lawyers or anything that they do. Suits wasn't around at that point, so I didn't have that inspiration. And really the course changed when I got a summer clerkship at a firm called Rudd, Watts & Stone, which is still the firm I'm at now, although the name has evolved slightly. And I did that. I enjoyed it. I thought I'll throw in some more commercial papers for my final year after that. Got asked back as a law clerk, worked for about 3 years in Auckland at Rudd Watts, mainly in the commercial property team, doing interesting things there. And then I accepted a job in Guernsey in the Channel Islands, which I read an advertisement on the back of the Northern Law News, a sort of lawyers' newspaper looking for offshore finance lawyers, which sounded unusual and doing something a little different rather than following the well-worn path of going to London. I obviously like
London
France. London adjacent, definitely, and it was definitely described as kind of London style work for firms that worked with London law firms. And I liked France. And my wife, Catherine, was studying for a PhD in French at the time, and it was convenient for her to be somewhere where she could jaunt off to the archives in Paris. She did while we were there.
Nice.
And that job was really an investment funds role. So a little bit of finance, but largely setting up funds, because Guernsey, like Jersey, Isle of Man, Cayman Islands, British Virgin Islands, Bermuda, offshore finance centres are well known as fund domiciles, amongst other things. It's a convenient place to set up a fund where there isn't an extra layer of tax, and there's sort of a recognised community of professionals who can set up funds. So that's what I did.
Did you start your family there? Because you said that you...
Yeah, we did actually. So my two eldest daughters were born in Guernsey, and for that they get no rights to any form of passport, which is other than a New Zealand passport, because I was there on a work permit. So that's definitely held against me, but that's all right.
And then you said you had a quick stint.
Yeah, so what happened next was, so after 4 years there, I spent a bit of time in France, in Normandy, in Caen, studying to be admitted to the Guernsey bar. Basically, to be admitted as an advocate of the Royal Court of Guernsey, you have to do a 3-month course taught in French at the University of Caen.
That's lucky.
Largely on Norman customary law of the time of the Duchy of Normandy, which is sort of the roots of the Guernsey legal system. It's all very modern and sort of English style these days, but if you step off a narrow path of commercial law, you need to have a little bit of extra stuff. And yes, it was very lucky that I had at least a BA in French at that time.
Well, you've got an affinity, by the sounds of it, for history and such. So those sort of studies and those kind of experiences, do they really capture your imagination and kind of like... absolutely. Get you going?
I mean, it was great to spend 4 years in Guernsey. I'm sure I would have loved if I'd lived in London or New York, but it was something a little bit different.
Yeah.
And really got me on the investment path in terms of developing a bit of a passion for funds, structuring funds. So, working out the best way to put sort of an investment proposition together for both investors and the fund managers. Yeah,
that's cool. And then you talked about your small stint in the Cayman Islands.
Yeah, so after that, the Guernsey law firm, Ozier, that I worked for, was one of the first firms to jump jurisdictions. So they were originally a Jersey law firm that opened an office in Guernsey, which is where I went to, which had never happened before. Then they were the first to go trans-Tasman, and they merged with a law firm in the Cayman Islands. And so I thought I would go there and maybe spend a few years or a couple of years learning some more skills. Unfortunately, when we got there, Hurricane Ivan had just been through a couple of months before we got there. The place was really struggling in terms of its rebuild. There was definitely, I did 3 months of amazing work setting up hedge funds and doing interesting things, but we were there with 2 kids under the age of 3, so it really wasn't ideal. So we made a snap decision that we'd come back to New Zealand. And so I picked up the phone and had a couple of amusingly unsatisfactory job interviews with other law firms, but I had an amazing call with my old firm, and they enticed me back.
When you make those, talk about kind of, we were talking about the trajectory of your life and this kind of thing we call wealth, which I think is, encompasses many things, of course. But a snap decision like that with, at that time, that's a big wealth decision. We think about wealth decisions as, what investment or KiwiSaver or mortgages or insurance. These are all things that we think of when we think of financial services and financial advice. But many of the decisions we make in life are not necessarily a purchasing a financial asset or a product. It's, where do I work? Where do I live?
Yeah.
We need to just choose to now move quickly because it's right for us in this moment. Like, how do you think a sensible way to have those conversations is when you're having to make a quick decision like that?
Well, you do have to just talk, particularly if you're in a couple or in a family, then obviously you make these decisions jointly. And it was a real decision for us because actually in the Cayman Islands, we were earning tax-free US dollar, quite elevated
Okay,
salary.
you moved to US dollars when you went to Cayman.
Yeah, so,
so you went to pounds.
Guernsey is in pounds, even though it's not the United Kingdom, but they use the British pound, although they print their own banknotes and coins. Cayman, on the other hand, tends to use the US dollar because it's in the Caribbean, so next to the US.
Yeah.
But yeah, going back to that decision, so, and the interesting thing was tax, like many things. Because being in the Cayman Islands, they don't have income tax. It's one of the reasons they are what they are. But we'd passed through New Zealand for probably about a month or slightly more on the way there to see family, thinking that we would be then
there for a long time.
So once we knew, probably about a month in, that we didn't really want to be in Cayman anymore, we realized that, well, if we stayed for another, say, 5 months, so we were there for 6 months in all, then we wouldn't be tax resident in New Zealand. But because of the way the 180-day tax residence test in New Zealand, because we'd broken the tax residence previously by being in Guernsey for years.
Right.
But if we went back before we'd spent 6 months away, then our 180 days would start counting from the time we'd passed through New Zealand on the way, which would mean that after we'd been back in New Zealand for another couple of months, that we would have been deemed to be New Zealand tax resident the whole time that we were in Cayman, meaning that we would have to pay New Zealand tax on what would otherwise have been tax-free Cayman salary.
Yeah.
And the decision we made was to just come back. Because, we still had to give a couple of months' notice to leave. So we left after about 3 months. But the decision, it was clear to us that we wanted to be back, and that we were in the wrong place. So rather than stick it out for another 3 months on top of that and not give a gift to the New Zealand taxpayer for the time that we were in Cayman, we made the decision to come back anyway, and we made a one-off payment for New Zealand tax on all the money we earned in Cayman. So you're welcome. Schools and hospitals, tax is love.
Nice. That's quite interesting.
But you make the decision which is right for you at the time, and it shouldn't be driven entirely by money.
And I think that it's quite interesting that making that decision is interesting, but I think once you know you're not in the right place, everything becomes messier and more complex.
Yeah.
And the longer you stay, you're kind of kicking the can. And even if you do save probably what would have been like 30-odd%, like sometimes it's a bit of a fallacy to.
Yeah. Look, and I knew I was coming back to a decent job in New Zealand, bit of a pay cut, but
is that like
turned out okay?
Is that like the primary hack, you think, though? Is it the experience, or is it the currency that you earn in that really drives people to the OEs and to go and?
I think it's the experience.
It's just a byproduct that you have.
Having said that, you certainly do earn more, and it was certainly great to be overseas. Although it was quite amusing because we arrived in Guernsey and we saved some money. I think we'd actually paid off our student loans before we went after our work in New Zealand, but had nothing, were utterly penniless, had to, I think, borrow the bond for our flat from my new boss in Guernsey when we arrived there, because we literally had no money. But then we were able to save as well as traveling and things, and thinking, we're earning so well in Guernsey that we'll be able to come back to New Zealand, which was the plan, and we'll buy a house cash down.
Yeah.
And as we were there, of course, this is early 2000s, watching house prices in New Zealand, 6 months later, we'll be able to come back to New Zealand and, we'll have a tiny mortgage, the smallest mortgage you've ever seen. And then by the end of it, it was kind of, we can come back to New Zealand and have a decent deposit on the house. So,
it was just running away.
Yeah.
Running away
at that point.
Well, that makes sense. Oh yeah, and then so you come back, you re-establish with the
Yes.
old firm, the old stomping
Welcome
ground.
back, different team.
The prodigal son has returned.
That's right.
Don't worry, I'm gonna come in and help you guys just revolutionize your financial services.
Yeah, and the thing was that coming back as having been a funds lawyer in 2005, New Zealand, this is how old I am. We didn't really have a funds industry. No offense to those involved, but it's fair to say it was very small. And partly that was because at that time we didn't have the PI tax regime, so we didn't have KiwiSaver. It was actually tax inefficient to invest in a fund as opposed to buying shares yourself, because if you bought shares yourself and then sold them, you would say capital account, don't pay tax, whereas a fund that was in the business of buying and selling shares paid full tax every time it sold a share, income tax.
Right.
So that's what the PI regime kind of fixed.
But did it but then it made PI more efficient than owning shares directly?
Yes, correct. So that actually intentionally reversed the position. So
do you think that's right? Do you think that shouldn't it be equally as efficient to own direct or be in a fund?
It actually, and it kind of is equal in terms of capital gains.
Yes, it's the income side of PI, right?
On the income side, it is capped at 28%.
Yeah.
And partly there was an intention to prioritise funds because Sir Michael Cullen wanted to establish a funds industry around KiwiSaver and actually incentivise people to get into it. So that's why there were things like $1,000 kickstart to get into KiwiSaver back then and all that good stuff.
I guess it kind of makes sense, right? It's like the whole thing with EVs, and now obviously EVs have the road charges. Yeah. When you're trying to get something new adopted, I guess it does make sense to have a bit of a carrot there to go, hey, this is a new thing.
A lot of people didn't really think about funds or understand it, and it's still the case. I mean, there's still relative ignorance around what KiwiSaver is, and it's not a deposit that's held by the government on your behalf and paid out when you're 65. So we're all on a bit of an education journey, and then it's only been in more recent years when you've had particularly people like Sharesies come along that actually direct investment in shares for young people is kind of a thing.
Yeah.
Before that, even when I was working in the financial services industry, I didn't own shares directly, wouldn't have known where to start in terms of, having a relationship with a broker and ringing them up and saying, buy shares. Buy telecom shares.
Oh, I don't know. But yeah, that's cool.
So a lot of things have changed. But we kind of, as a firm, we saw this coming. We saw KiwiSaver and the developments that were heading that way. So we made a conscious decision to launch a funds and financial services practice. We hired a partner, Lloyd Kavanagh, who'd been a partner at another firm and had also done other amazing stuff, to come in and lead that practice. I wasn't a partner at that time, but I joined him to help launch that and then became a partner about 3 years later.
What is the process of becoming a partner? If someone wants the headache and that entrepreneurial bent, I guess, to the work that they've done, how do you best position yourself to become partner? I mean, I think a lot of it's probably timing.
Yeah, timing is definitely important.
But portion of it, but
there are some lucky people might be in the right place at the right time and have the skills to be a partner and have a position open up, if you like, because someone leaves or because a firm decides it needs to beef up or establish a new specialization or otherwise. But really the only way to guarantee you become a partner is to become someone that everyone says, I can't believe you're not a partner. And the way you become a partner is by persuading the people who are already partners that you will actually add something to their lives if they make you a partner, which is that you will generate work on a leveraged basis because you'll run a team of junior lawyers, and then everyone in the partnership will be able to share in that growth. So to become a partner, you really have to become a little bit famous and develop good relationships with people who might give you work, be known as being reliably excellent in the legal work that you do.
Yes.
And definitely take the other partners in your firm along for the journey. So.
Yeah. Do you feel like, because I guess, I'm making some assumptions here, but with the study you did, and when you went to Guernsey, and then you went over to France to get your to do the extra bit of study to join the Guernsey bar or whatever, it obviously sounds like you are really intrigued by learning and doing some what I would call deep work. And then when you become a partner, you're delegating that work out. It's like being a great engineer and then becoming a CTO or becoming a founder, and then the thing that kind of got you to the dance or got you really fired up, maybe second to all the other responsibilities that come. It's like becoming a parent almost. Or
Absolutely. It really is in some respects. And I definitely had done a lot of that deep work, and I'd always enjoyed studying. So I'd done an LLM, a master's in my first couple of years of work, just part-time whilst working, a Master of Laws. And I've done some economics study when I was in Guernsey through the University of London. I did a digital disruption course through Oxford, sort of distance learning last year, just to sort of keep my hand in a bit in some things. But you're right that it is a different set of skills to be a partner, leading a team, being a business owner, hiring, firing, making those sort of decisions. It's not just about being a good lawyer, but you kind of need that. You need to have that passion for your particular area of law and the deep knowledge that allows you to, the partner is the person who can sit in a meeting room, hear, talk through an issue with someone and actually have a decent idea as to what the issues are and what the law is likely to be. Even if you then caveat it and say, and we'll have to go away and get someone to double check that and write it up. And also just to do stuff and invent stuff, particularly in the areas that I really enjoy. And this is probably one of the reasons that I'm still doing what I'm doing and passionate about it, is just finding new ways to do things, like finding ways to create e-wallets and sort of store money digitally without triggering requirements to be like a licensed non-bank deposit taker. So we've built trust-based structures around that which work on a regulatory basis and allow people to stand something up. I mean, I remember when I had a call with the Sharesies founders very early when they were in their Fintech accelerator that they kicked off that business in. And, being them saying sort of, this is what we want to do, it's fractionalization, interests in actually ETFs was sort of the 1.0 version, offering them to people. We imagine this is going to be kind of highly regulated. And, a lawyer who was maybe less experienced in the specific area might well have said, that does sound like it should be highly regulated. We'll have to go away and do that. But actually I could see or think it through and think, well, actually what this is it's a form of a custody service, and it's not a management service. You're not managing other people's investments and making decisions for them. It's not an advice service, or it could be, but actually that version isn't, and it kind of still isn't for them. And custody is actually a service that, although there are obligations around it under our regulatory system, it's not a service that requires a license. Financial service provider registration, AML laws and things apply, but it's actually one area that if you can model your product and service a bit around that, it's actually quite easy to stand. Not easy, but the regulation is not going to be a blocker to standing something up. Yeah. So, but that took a fair amount of experience
at the time.
And novel at the time.
Oh, that's cool. And
and then as I've got involved in like the crypto digital asset space, a lot of that is really understanding the nature and substance of these products, not their appearance or otherwise, and how you can apply traditional law or legal concepts to these things which appear new and exotic in a way that allows you to sort of work through the regulation, and also to take people like the regulator, the Financial Markets Authority, along with you so that they understand how the law could apply or should be treated. And in particular, where things fall maybe outside some of the more heavily regulated spaces, just because of the way the law works, how you will actually ensure that you'll look after consumers and customers along the way as well.
Totally. And, you know, when you started getting interested in the digital asset space and crypto, was it an affinity for or a belief in what, I guess, in the early days Bitcoin was doing, or was it just the nature of, this is another asset that will need lots, you know, there's kind of, was it, I guess, an interest in was it an interest in the law around how would one or the law treat these assets versus the kind of dream and the kind of promise of what it could be, or was it a mixture of both? Or
it was kind of more, so kind of the superhero origin story of our Minter's crypto practice, which is still really the only big firm practice that's focused on this, and I've done quite a lot in that space and advised the government select committee, and I'm currently the chair of Blockchain NZ, and there are a few other lawyers around who have great knowledge and expertise, but we're still one of the only real big firm practices. But the origin was really prosaic. It was our financial services team liked to do a seminar to clients every quarter. We were picking something to do for a given quarter and suggested, let's have a look at crypto, because people were starting to talk about it. This was 2017, so it wasn't early, but it was before the big wave.
It was the first mainstream.
Just about coming onto the ICO boom and the first mainstream sort of uptake.
Crypto kitties.
Yeah. So we decided we'd do a seminar on it. Yeah. So we started to look at it, and we got kind of interested. So we wrote this is how naive we were, a white paper, because that seemed to be the lingo that people were talking about, called Tokens of Our Affection, which we put out into the universe, and we did our seminar on it. And a couple of days before the seminar, someone said, you should go and talk to this guy. And so I fished up to a fairly nondescript looking office somewhere in sort of Ponsonby, and spoke to Franz Streiner, who's kind of one of the OGs of the New Zealand crypto market. I believe he's now in El Salvador, sort of living the dream. And it was kind of a mind-opening experience, because he actually had been in the industry for a while and could see the uses of the technology outside simply Bitcoin. So it was, this is how distributed ledgers work. Right. This is actually what we're doing through tokenization, is allowing people to have sort of instant or near instant digital experiences, and to translate all of the things we do in our day-to-day lives, of which paying someone through, say, Bitcoin, if you were to use it for that as only one example, how you could actually use this technology to do a lot of different things. So that really opened my mind to thinking about things, and it becomes a design challenge, a thought experiment to work in the space and think about all the people doing really interesting things. And that's led us to work for some really fascinating people. So we've built stable coins digital coins that are pegged to government-issued fiat currency. We've created funds and other instruments around it. There's a great company called Toha, which is Natalie Whitaker, the founder of Give a Little, is one of the people behind it, using the concepts of tokenization to basically build a marketplace for social impact data. Yeah. And effectively, by creating the data, say, generated from reforesting land with native forest, and packaging up the data in increments that can then be sold for people to back up claims that they're doing good works, and avoid greenwashing claims by having verified data. And the tokenization element allows the operation of a market in a new way that actually therefore encourages people to do good things. So all of this, I really love the thinking behind a lot of the industry. So I'm very much in it for the, people like Mark Andreessen and others talk about the difference between the computer and the casino. So there's the side of crypto, which is meme coins and speculation and just trading in order to do things, in order to make money.
Speculation
and
to profit.
Sell to the greater fool who comes along next. All of that side of it certainly exists, but the builders, the people that are actually doing interesting things, is far more interesting to me. So NFTs, for example, non-fungible tokens, there's the side of it which was a bubble, and that was selling highly priced pictures of apes. That's one thing, but actually when you realize that the technology is just about ownership of digital worth and digital items that are not currencies, then that's a far more powerful set of tools.
Yeah.
So,
and I think that it's really important to disassociate the technology with human behavior.
Yeah.
Or computer behavior, if it's obviously speculation through algorithms and computerized systems. The thing that keeps me awake at night is the whole ownership, and it's unregulated to the point where it's uninsurable. When I think about ownership of, through acuity of owning equities or ETFs on our platform, it's insured and the user owns it. And there's no way if we go out of business, it doesn't matter, because the user will be able to go and transfer the assets that they own to another broker that's going to help service them, right? And I like the promise of Bitcoin. I think in 2023 with the banking crisis, you saw real application for it, right? And self-custodianship and the promise of really what it was built for, because it came out of 2008, right? It kind of really was shown there. And it's like, and I know that we're seeing ETFs come along and stuff like that, but I'm just like, I wonder if there, and I'm sure there is probably already, but there's going to be a whole industry about trying to insure.
Yeah, no, absolutely.
This stuff.
And there are practical aspects of that, and then there are regulatory aspects of that, because it's true that, regulation, the lack of regulation around trading on markets has led to the ability for people to execute scams and rug pulls and insider trading is rife, and all of those things. Absolutely. You can be charitable and look at them as growing pains on the way towards greater regulation, and regulation is definitely coming. Certainly in Europe, in the UK, they've started to build sensible regulatory systems. The US has had kind of a wild ride, in the sense that a lot of things happened there, and then the regulators, the SEC in particular, went down a path of arguably regulation by enforcement, where although they had a very solid industry of very sensible traditional finance people wanting to enter the industry and create exchanges and get regulated and do things, the SEC was very much in the mode of not providing guidance. Congress and Senate were very tied up in terms of not passing legislation. So you had this kind of self-perpetuating Wild West, where the SEC would do nothing other than take enforcement actions
and honey
often
badger, right? As well,
often
like founders.
unsuccessful. All of those things. So that was not necessarily the best way either. And then in New Zealand, we're still a long way behind what we might do to actually regulate this industry. Because I would love for things like, people who give advice around investment in cryptocurrencies, for that to be perhaps captured by our financial advice rules. Sounds like a bit of an easy win.
That does.
For technical reasons, it's not caught at the moment.
Right. So. Well, I mainly get freaked out by the custodianship side and how do you protect people against really things that they might not be able to control. For example, your hardware, your wallet somehow gets compromised in some way. It doesn't work, and it's like, that really sucks. I would happily pay, especially if I had a decent stake in the crypto, I would happily pay for some sort of insurance in that, so that I can have some confidence.
That is definitely evolving. And that is one of the definite issues with the crypto industry, is that it has been built by tech people originally. And a lot of the interfacing and the customer experience has been clunky and unreliable. And yes, you can lose your hard wallet, or you can lose your 12-word phrase.
Yes.
Suddenly you might have lost thousands of dollars, and it might not have even been thousands of dollars when you put it in, but now it's incredibly valuable. So, and that part is all kind of amusingly wacky if you're looking at it from a distance, but not very funny if it happens to you.
No, and
hacks and all of that is.
And I guess it's by design, in a sense, because actually
in a way it is.
What we're that's the kind of interesting conundrum you have around ETFs and governments buying and different treasuries of owning different cryptocurrencies versus the intention behind it, perhaps.
If the original intention was around decentralization and disintermediation, because that's the whole promise of a decentralized ledger, is that you don't have to trust an intermediary or a bank or a custodian or someone to hold your assets. You can hold them directly yourself. But in practice, now that the assets have themselves built into an asset class that people wish to trade and which have its trillions of dollars of value, you really, in practice, a lot of people, if it's to have mass adoption, will need these extra layers of.
And that's unfortunately cost.
Yeah,
that will first remain really quite high, and then it will be competed away over time. Because I just think about insuring it in the early days, much harder, and it will be really interesting. I'm just a bit of a nerd with certain things, but it'll be really interesting seeing how premiums kind of evolve over time, especially when you get to different technological events, stuff like quantum, and then the whole kind of dynamics, the whole premium space around that kind of potential insurance could get really fascinating.
Yeah, and then, there are also possibilities for decentralized forms of insurance that are sort of crypto native, which people have tried to grow as well, or putting money into pools which can actually instantly pay out if a coded event happens. So, that's cool. The technology being used to replace this concept of having an insurance company which somehow assesses your claim and may approve or deny you based on factors that are beyond your control. Actually, algorithmic sort of coded insurance might well have a place. I think undoubtedly will have a place.
Well, anything pooled. There's a pretty nice application there to basically decentralization and blockchain. There's some really interesting use cases. And
what I like about the whole area, which keeps me interested, is that it is very future focused, in that for the people who are really thinking about it, and putting to one side the scammers and the people who are just trying to make a quick buck along the way, is, looking ahead to where will we be in 20 years' time? How much of our lives will be lived digitally, either, in a metaverse type environment or an augmented reality type environment? Just, we're definitely going to have digital assets, digital parts of our lives. And NFTs and decentralized ledgers and tokenization offer ways for people to actually own these things, which go beyond the current model, where you have a lot of the digital assets of our lives that we have are actually held at the whim of big tech companies like Meta, Google, Apple, who really are just issuing us a license to use this pool of photos, information, data that we've created, and which is part of our lives as an asset, but is really owned by them. So I like the way that blockchain, crypto is a countercurrent to that. Doesn't mean it's necessarily going to win, but it is by always providing an option to just dealing with a big tech company that will, where you hand over the ownership for your data and your digital life in exchange for the ease of using their service. You want to have some sort of pressure on that not to be the norm for the future.
Totally. You know what I've been thinking about over the last couple of weeks a little bit is, because we've been running this agent project where we've been building this kind of fictional but paper trading an equity portfolio of trained agents that are kind of personalized to famous investors we love, and then they basically only communicate with each other in a Discord server through information that we send them about markets and events, etc.
Yeah, it's pretty cool.
And then they communicate with each other around the analysis that they all do. So information comes in and analyzes, and then they all analyze each other's work. And then every Wednesday there's an investment committee meeting, and they all provide portfolio construction. And then the committee agent goes and amalgamates the suggestions. But I kind of think a little bit further out than that and go, well, are agents going to own assets? And what does that mean, right? Because actually, let's say we just let these agents loose, like, obviously there's a very simple ownership structure where the engineer, just like a website, whoever creates it will own assets. But will own the asset of the agent. And I get that the ownership could easily come back there, but if you take a few steps forward, it actually isn't out of the realm where agents create economic kind of activity through spending. And earning, of course. And then, obviously, then ownership of something could be assigned to an agent.
And it's not unusual to have ownership of an asset by a legal person as opposed to a natural person. We do that all the time. Companies are not natural persons, but they can definitely own stuff. And, the realms of who can be a separate legal person grows all the time. We have in New Zealand given legal personship to rivers and mountains, as well as other things. I'm not sure if a mountain can own a share portfolio just yet, but,
maybe one day.
Things are possible.
Maybe through blockchain.
Maybe. But, if you overlay AI onto that to give these things a brain, and they have a legal personship and can therefore own assets and trade assets, we start to become a bit pointless, really, don't we? Or at least, to put it another way, maybe it's better that we can actually have friends and digital employees who can go out and invest our money for us and explain it to us at the end of the day.
And maybe we keep that ownership. That was just it's a random thought that I've been thinking about, mainly when you get levels and levels deeper of kind of where does it go, or where can it go? And once an agent is in a body of a robot body, but actually, if you think about the world we live in, a lot of it is online. So if it lives in an EC2 instance,
is it different if it's we think a fully intelligent robot cyborg of the future as seen on science fiction TV or movies is kind of in the future, but we're kind of there already in terms of having a fully realized digital avatar with a brain that can actually do stuff. And there's some interesting companies in New Zealand that are working on that as well.
Yeah, I mean, the same code would theoretically run in a data center as it would in an independent agent, independent kind of robot. So, it's the same thing.
And then what are the issues around, at some point, owning that person? Sort of, at some point, do slavery laws kick in? Can you own a digitally intelligent, fully rendered person?
Do you get because you're so deep in crypto and the finance space, fintech space, but with everything that's going on in AI, do you kind of look over and go, oh well, could be a could be another iteration here of my trajectory, or are you like, nah, leave it for someone else that has the energy for it?
It is kind of a bit of that. I mean, we've been interested in AI as a firm for a while. We actually, as just part of our innovation culture, a few years ago, 5 or 6 years ago, we founded an AI company called McCarthy Finch,
right,
which we did as a 50-50 JV with Rush Digital, Goat Ventures, another great New Zealand tech company, because we thought, they know about AI, we know about legal documents, and we have this sort of pool of data. So we created a company, we funded it. It took an external capital and investment from Icehouse and various others, and it built some tools, and we then exited and sold it to a big US legal tech company called Onnit. And all of that just before generative AI launched.
Right.
So, in some ways, we were lucky because,
it would have
what we built would have been probably disrupted even more if we'd held on to it. But, AI is fascinating, but it's definitely, for me, it's kind of like my head is still very much
wrapped in this,
in blockchain and digital assets, and I can see the adjacencies to AI, but I'm very happy for someone else to be the AI guy. So Tom Marsland, the partner at our firm, is our AI guru, is leading the charge. We've been working with MinterEllison in Australia in terms of how we use AI.
Yeah.
Tom actually has a great podcast. So we do a podcast at Minters called Tech Suite that I've been on, and I've done some things. But one of the versions that Tom did was he did a podcast where he interviewed ChatGPT.
Oh, okay.
So literally with the vocal on.
Yep.
So just asking questions and having a fully realized conversation with the AI to sort of ask it questions about itself and what it was good for and what it was not. So the future is with us. Yeah,
the future is here and
just
always
unevenly
happening.
Distributed.
Yes. Awesome. So I guess to end on two things. One, what does success look like for you in 5 years?
Excellent question.
Yeah, what are you thinking about, and what plans are you scheming that maybe even beyond, Jeremy the lawyer, but Jeremy the human has a family, has a life, but is interested, intellectually with this kind of life's work, which I'd call it almost at this stage, right? What does success look like in 5 years?
I wish I knew the answer to that, but I'm also kind of happy not to. But I am starting to think about it. If you'd asked me as a young lawyer, would I be a partner of a law firm and be sort of 14 years in at this point, that would have astounded me, but because I would have assumed that I would do something else.
Okay.
But because I have done so many different things or followed little tangents, and my practice at the moment is so interesting with the types of people like you that I get to meet who are doing new things. It's certainly not like I'm the type of lawyer who does the same type of transaction every month with different names and numbers. So that has definitely kept me interesting. I think in 5 years' time, hopefully I'm a little less frenetic, as in, running a large practice whilst also, wanting to spend time with people and thinking and doing all of that. It does feel it is quite busy. I would like to have some more time to think more slowly about some of these trends and ideas. So whether that's by dialing back some of my practice and being a consultant at Minters, or doing something different, or focusing more on the sort of venture capital sort of aspects of what I do. These are all things that I could be interested in, but equally, maybe it would be taking a break and studying something else, or write a book.
Would you say that you're well, I mean, I'd assume it and probably feel like I'm right. You're a lifelong learner.
Yeah, well, absolutely.
I mean,
I love to read. I love to, experience stuff, and I've grown more and more to just love talking to people and doing things like this.
Awesome. All right, last thing before we land. and I appreciate you taking the extra time because we half did this once. But I think
this version is so much better than the first version.
You don't want to see the last version; it's terrible. Young clerk getting into the practice of law, like the law kind of journey. Maybe the guy that emailed us the other day.
Yeah,
cool guy, really intrigued, really fascinated by learning, really wants to do well in law.
Yep.
I forget his name. I'm sorry. His dad introduced me, but young guy is still studying. Actually, taking the initiative to come and work with you guys, and is really motivated. But there's this whole. And I don't think that it takes over, but there's this whole opportunity to...
Right, I remember who you are, Ed.
Ed, is it Ed? Ed, you're probably not watching it. Maybe he will. So Ed's coming into Minters. He's still studying, super motivated, super ambitious by the looks of it, super inquisitive, has this amazing opportunity and threat of AI.
Yes.
And what does the future look like? And everything's changed, and it's all different this time. What does Ed or whoever else it is getting into the space do to kind of cement themselves in a relatively historical career that's kind of got this lineage, but is has there is this opportunity to utilize AI, but it also kind of has these kind of perceived threats. So. And does it mean that firms get bigger, or does it mean that there are more firms and these firms are smaller? You know what I mean? So how does someone, from your vantage point, set themselves up for success? Maybe with a more traditional lens, but also taking into account that we are seeing teams or dynamics of teams change. So I guess there's the EQ and the IQ.
It's a great question, and certainly one of the reasons we did the investment and founded the AI company was to see if we could learn something that would help answer that question for us going forward. So, because we need to know, are we going to need to hire more people? Are we going to need to hire fewer people? Do we need them to be trained and educated differently? Do we have to talk to the law schools and things like that? And it's a real learning curve, and we don't know the answers yet. I'd like to think that there will, certainly for the next little while, still be a place for humans to supervise and to prompt and to actually work with the AI, and for at least for the foreseeable in short to medium term future, AI will be a tool that just takes some of the busy work out of the day, rather than maybe creates a way to be more efficient around email, can create first drafts of documents and things. But it's certainly true that it will be doing some of the things that previously young first-year lawyers, law clerks, interns would have been doing. So we need to find new ways to use those people. And if it's by getting people to actually slow down and think about trends, human interactions, things driven by EQ, all of that, humans are going to have an edge for a little while yet.
For sure. I mean, life becomes more entrepreneurial, doesn't it?
Yeah,
it seems so.
That's the hope, I think.
I think that's cool. But I think it's like one of those things where, like you say, I mean, I'd hate, think about your career and some of the work that you've done. Like, it kind of seems like such a shame to almost lose that ability or kind of need to think deeply.
Yeah. And even some of those banal tasks around, reviewing line by line legal documents, or there was one of the things we used to do when I first began was, before there was comparison software where you could compare two versions of a document and press a button and it would immediately come up as a markup, is you would have to use printed out hard copies of each document with a ruler running down line by line on each doc to just check that they were the same, which is an utterly
that's
monotonous task. But boy, you knew what was in the document by the end of it. So now the risk is that people will just press a button, generate a 100-page document, and never feel the need to actually understand what's in it.
I think about that. I think about that in terms of my kids, Yeah. But anyway, this has been really fun.
Yep,
thank you so much for coming on and having a chat. I've really enjoyed it. I've learned a lot. So thank you.